living expenses is something that the banks are really scrutinizing now. And I've got some classic stories, mate. You wouldn't believe the stuff I get asked by credit assessors. It's come back a little bit now, but just after the Royal Commission, I had one bank ring me and say, how many kebabs is this guy having? You for real? The other one was...
Late night, 3 a.m. kebabs.
Yeah. The other one was how much dog food.
So they're going to this level of detail. They're actually checking the bank statements. It's not like a cursory look. They're actually investigating everything. It never used to be like that, right?
Yeah, it never used to be like that. Just on Friday, we're recording on a Monday. This bank was asking why her declared food expenses was at X amount, and yet on her bank statements, it was substantially higher. And so they said, no, we're not approving it until you explain that. And so the explanation came back was she's living with a flatmate and she bought all the groceries and the flatmate pays her back. So I can't begin to tell you, just rein in the living expenses 3 to 6 months before you actually think about making that acquisition. If you know there are some things that you don't need, then just get rid of it. So it's not on your bank statements, because if it's in your bank statements, they will question it 100%.
So the takeaway is to reduce the living expenses. Of course, you should reduce them as far as possible into going concern, but most importantly, 3 months before applying for a loan. Is that right? Yeah,
ideally 6, because the software I send out will bring out a 6-month statement.
Yeah,
and we have to go through it. All right. So yeah, it's common sense anyway to rein in expenses. The fifth one that I've got is the type of loan. Now, there are some lenders where if you fix your loan, they will actually use the fixed repayment. So a lot of your viewers may not know that the banks will put a buffer above what you're paying if it's a variable rate loan.
Yeah.
So there may be consensus at this time of recording to take advantage of the delta and fix some of the loan, because it's about 0.5% difference between fixed and variable.
Yeah.
So sometimes that could be the difference of getting that extra property, because you're fixing the loan and the bank goes, yep, bang, it's all. If you've got 5 investment properties and you're paying 3% interest and it's now 2.5% and you fixed all of them for a year, it might be enough to get you across the line.
So I understand this, John. So obviously fixed loans, point of recording are most often cheaper than the variable. But what you're saying is that they're not going to add that, a 2% buffer on top of a fixed loan. So they're actually going to lend you so much more money if you just wholesale fix all your loans. Is that what you're saying?
Yeah, so it's not every lender.
Okay.
So there's so many lenders out there that what they do is they go to market with their own little niches and credit policies. And this is where it harks back to finding a broker who specializes in what you're doing. Yeah. So there are lenders who will go, yeah, we'll just take the fixed repayment amounts because we know it's not going to change.
So when it comes to finding like a good broker, John, I just really want to understand this, because, I've got you here. Why is not every broker just like you? Why do some brokers not open themselves up to all lenders? Like, it just seems logical for me that if there's so many lenders and they have all these different policies, a broker would try to understand all of them and give their client the best service. Why is it that some brokers only focus on 5 lenders or 10? Like, this is a bit of an ignorant question. What's your view on that?
I don't know, PK. I don't know. I think just from experience, I know it's too hard to be a jack of all trades.
Right.
And everyone does try and do that because they're so desperate for work. But a broker is juggling so much. They're out there trying to prospect for work. They've got work in the books already and they've got to maintain that. There's just so much communication that goes on. Anyway, one file might mean an email to an assessor, to a solicitor, to a real estate agent, back to the client. That's just 4. And if you've got 10, that's 40 emails that's already gone out. So, it's a massive juggle. Hence the reason I'm saying if you want to do development finance, there are brokers that are much better than me that do development finance.
Sure.
I can do it, but I'm not the best at it. There are brokers out there that are perfect for first homeowners.
Yeah.
Okay. And so just like anything in life, if you find a doctor that specializes in something, they're obviously going to get very good at it.
Sure, got it. No, it makes sense. So you find someone that specializes in property investing, not a jack of all trades, because they're actually going to know what they're doing. I think that's my takeaway.
Yeah,